It's like they literally tell you this stuff in their documents, people. They don't hide this stuff. And this is coming from perspectives from the largest asset managers on the face of this planet. Attention to this is how you get insightful information without tapping into the bullcrap mainstream distractions. Alrighty, what is going on, everybody? Welcome back to another CYPRX video breakdown. In today's video, we're going to be doing a deep market dive, discussing and talking about some ongoing fundamentals, creating this market pullback, making sure that none of my followers or individuals that watch the CYPRX YouTube are being manipulated by these uneducated posts, millionaires, and individuals in this space that are here to distract and disorient your attention from the macro underlying factors that are creating this type of volatile price action and weighing on risk assets. I'm here in an attempt to properly educate you guys and make aware to you all the factors that are actually driving market sentiment to safe haven assets in the moment. So that way you guys can better prepare yourselves mentally and have a better situational awareness of what is going on, not only in the markets, but just in general in the world economy. Okay, man. So markets are down $93 billion as of time of recording this video breakdown. We're looking at the total cryptocurrency market cap as a whole, including a Bitcoin. And the reason why I'm even talking about this and making this type of video content, we're going to get into a post from Peter Schiff that just recently came out where he's saying that this most recent situation that's happening in the market is a rug pull, which is embarrassing. We'll get to that in just one second. But I also want to make sure I give you guys some resources so that way if you're interested in furthering your education and what it is that I'm talking about, and you actually care about the markets and what you're invested in, you can take a mature approach and you can go look into this stuff yourself. If you guys want a more in-depth educational approach and you don't want to go out and sift through all this information yourself, and you want to jump on Zoom calls, you want to read fundamental reports, you want to stay updated in the moment, then head over to CYPRXtrading.com. If you enjoy these types of video breakdowns, if you watch the entirety of it and it's like clicking for you and you're like, oh my gosh, I actually want to learn about this stuff, we would love to have you on the team. All right, because we're constantly informing our private community members on this stuff. We're keeping everybody up to date. We are one of the only community members calling this stuff out in advance, and now we are here. So I said to you guys on X, stay grounded in what matters. Macro fundamentals over market noise. As an investor, keep in mind, investors are separate from traders. That's going to play an important role here in just one second. You need to understand that most likely you watching this video breakdown, you're an investor. You're not a trader. A trader is someone who utilizes leverage, who utilizes spot trading, buys into positions or sells into positions, and quickly takes profits in minutes, days, weeks, months, right? You're most likely a long-term investor, meaning your dollar cost averaging into positions, you're holding them for the long term. You need to understand the difference, and you need to understand that that's who you are as an individual, so that way you can survive this long term, right? We'll get into that in just one second, understand the difference between the two, but just know in the back of your mind that most likely you watching this, if you're not taking leverage position to take profit from the market intraday or scalping or swing trading, then you're most likely just an investor. You're most likely looking to just have long-term price appreciation in the digital asset or crypto ecosystem. And as an investor, one of your greatest assets is the ability to stay focused on the big picture. Market headlines can be flashy and dramatic, but headlines alone often lack substance or true market moving power. Most headlines do that. Instead of chasing the latest breaking news on sensational stories, take a step back. I encourage you guys to take a step back and look at the broader economic landscape. When you understand the macro fundamentals, economic growth, interest rates, inflationary trends, consumer sentiment, you then gain clarity and confidence. You see beyond the short-term twists and turns, and you start to recognize the deeper forces that truly shape markets. This perspective helps you make measured decisions that align with your long-term goals rather than being swayed by hype or fear. Remember, short-lived headlines, they come and go, but solid fundamentals stand the test of time. By tuning out the noise and focusing on real data, you not only protect your portfolio, you protect your peace of mind. And that is extremely important, because left and right, I see individuals on the internet completely breaking character, saying, F crypto, this is crazy, blah, 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 blah. Why are the markets crashing? And it's because they simply don't understand the macro fundamental drivers creating these types of market pullbacks. I'll give you a perfect example. This, honest to God, is absolutely embarrassing. So watch your guru having such a massive presence in this market, in this landscape as an influencer platform is just honestly, it's embarrassing that they post stuff like this. 1 million views, and I understand why, because they're clickbaity, right? They like views. They're not here to really properly educate people. They're just here to create breaking headline stories and attract attention to their platform. Okay. This is disgusting, though. Justin, anti-crypto Peter Schiff says, President Trump helped pull off the biggest crypto rug pull of all time and calls Congress to investigate. Peter Schiff, what the heck are you talking about? This is embarrassing coming from, I don't know if this dude's a multi-billionaire, or maybe he's a multi-millionaire, who knows? But he said here in this post, Donald Trump, the first crypto president, just helped pull off the biggest rug pull of crypto of all time. Okay. And let's just think logically. Okay. So this post was just recently released here in this area. Okay. So just measuring from the most recent high when this post was made to the low, we're seeing about $400 billion of outflows in the digital asset ecosystem. Okay. Look at this from a logical perspective. Peter Schiff is now saying that this is the biggest rug pull in history, when in reality, this market pullback started back at the end of last year in December 2024 on the 18th. Now, if you go to our X profile and you go and look at our tweets, and you can take them and you can put them on the charts via copying the link and posting it on TradingView, you can see that we warned everybody about this pullback, not to toot our own horn, but to show you guys that we give proper information and education about these markets ahead of the curve. We said to you guys that hawkish comments from Jerome Powell would most likely weigh on risk sentiment, dialing back previous higher expected rate cuts from the Fed that were being priced in back in September, October, November of 2024, which is one of the primary drivers of this market rally. We'll get into that in just one second. Okay. We would also likely see sell pressure on risk assets if we saw hawkish comments from Bank of Japan speakers, creating strength in the Japanese yen due to higher inflation or economic strength in the Japanese economy. Okay. We mentioned any tariff implications or geopolitical uncertainty would also weigh on the overall risk parameters in the market and create more demand for safe haven assets like the yen, like gold, like the dollar, which right now isn't performing as well, which is creating more demand for the yen and more demand for the dollar. And all of these factors over the past consecutive couple of months are the reasons why we're seeing massive outflows of risk assets and more inflow into safe haven assets. This is not a rug pull. This is a simple market correction. And if you do your due diligence, you can understand these things and you can see that these private family offices, these major hedge funds, these large crypto native banks that are heavily allocated into this space tell you this stuff in their panel discussions for you all to tap into and pay attention. But again, let me show you guys the level of ignorance that exists in the market. So just as an example, okay, to prove what it is that I'm saying, this post alone has 1 million views. If we head over here, okay, this is a panel discussion from multiple institutions, multiple hedge funds, and private family offices sitting on stage. This has 21 views. Listen to this gentleman from a private family office talk about how they base their investments based off of risk sentiment.
Public market investments, etc. It's not so easy for you to understand how to deal with crypto in your portfolio. So our approach is the following. So we maintain our long-term view and we increase our allocation in crypto when we believe that this is the right time to increase our strategic allocation. So that's based on global liquidity, risk appetite, things like that.
Now, two things that he just mentioned that drive their investment portfolio is global liquidity and risk sentiment, which is exactly what it is that we talk about here at CYPRX from an institutional perspective. This is what these large players are paying attention to. They're not paying attention to moon cycles. They're not paying attention to all of these little tiny Fibonacci price predictions or indicators that retail traders have on their charts. They're paying attention to the macro fundamental drivers. Here is another fundamental video breakdown from Signum, again, a large market participant in this space, a crypto native bank. This video was only from 7 days ago and has 144 views. Listen to the Signum head of investment research talk about the current market landscape.
As far as the financial markets in general are concerned, I think Trump's cocktail of economic policies is controversial. And they definitely carry inflationary risks, for sure. And even, if the growth numbers are not maintained, then stagflationary risks, right? So the markets, I think, are still assessing the likely net result of this combination of tariffs and maybe tax cuts and cost savings and so on, various policies. And on top of that, this is further complicated by certain other factors, like more recently the accelerating Japanese inflation, and with that the expectation of Japanese rate hikes, which of course often traditionally has and is expected to have knock-on effects on risk assets. So there's all this uncertainty, I think, about. I think first of all, the market had an incredible rally post-elections. It was up 60% roughly in 6 weeks. So after that, some consolidation and correction is due. That's healthy and normal. But also, I think everybody positioned themselves after the elections, the pro-crypto appointments that were coming out one after the other, the resignation of Gary Gensler, and since then, there has not been a strong catalyst, certainly from the administration, as they focus on economic and foreign policy and not so much on crypto. So the market is awaiting a fresh catalyst.
Now, the reason why I'm showing you guys this information is because, again, these are coming from reputable individuals in this space that actually have valid credentials, that have large allocations into this digital asset ecosystem. And you can see the lack of just views that this is getting. This is just disgusting. So you have retail platforms here, like Watch Your Guru, posting this information. You can see where the mainstream herd is distracted and where their attention is oriented towards. I will never use my platform for this type of distracting, misleading information. We will consistently be a light in a very dark, clouded space here in the digital asset ecosystem to shed truth and realness, so that way you guys are actually learning, you're educating, you're growing, and you're consistently evolving as an investor or as a trader in this space, learning from the pitfalls, learning from these market corrections, and understanding why they happen. Okay, so I responded to this by saying, understand the risk off shift. Let's understand this as a community together. Investors need to understand that right now, this is a trader-driven market environment. The recent correction is not a rug pull. It is simply just a correction. And as you heard the Signum representative, most people bought into the euphoria after Trump won the election in November. Bull market makers were also pricing in high expectations that the Fed was going to deliver 4 rate cuts in 2025, right? Those rate cut expectations were dialed back on December 18th when Jerome Powell came out with hawkish remarks via the FOMC meeting and dialed back those rate cut expectations down to 2 to 1 in 2025. And that was the first catalyst that weighed on market sentiment and started this market correction. I said here, it's embarrassing seeing large platforms and millionaires post things like this, and it just confirms the level of ignorance being displayed to the masses. The recent downturn is a volatile pullback that began on December 18th, 2024, triggered by a shift in Federal Reserve expectations. Several macro forces also aligned shortly after to create a risk-off environment, affecting not just crypto, but all risk assets in general. The bottom line here is that it's a macro-driven risk-off shift. This is not a rug pull. It is a natural market correction away from risk assets due to diminished Fed easing expectations at the end of 2024, which kicked all of this off, trade war and geopolitical risks, yen carry trade unwinds, and central bank policy divergences. Stop believing ignorant headlines and understand the macro factors that actually drive these moves. You can do this for free by watching panel discussions of institutional analysts from major hedge funds, family offices, or crypto native banks that all have large allocations into this space. You can read fundamental reports on LinkedIn. These same institutional players release these fundamentals to you all weekly and monthly. So with that out of the way, if you guys have stuck around, again, I'm just here in an attempt to educate you guys. I know this stuff is boring, right? Nobody, this video is probably going to get 2,000, 3,000 views because nobody wants to hear this crap. But I don't care what people want to hear. I'm not here to drive people's dopamine. I'm here, and I created CYPRX to educate people properly on these markets. And the people that actually want to become educated are winning in our community. I'm going to host a live call here shortly. You guys are probably going to see it as a recording, but we're going to have 3 profitable traders in the private CYPRX community. And we're going to talk about the ups, the downs, the realistic expectations, the unrealistic expectations of becoming a profitable day trader. And you're going to see that this community is truly changing people's lives via the people that actually want to pay attention to the stuff that matters and not this absolute garbage bullcrap that is just here to distract and manipulate you, that is clearly consuming everybody's attention. Okay. So let me just show you guys some free resources. Like I mentioned, okay, all of these panel forums and discussions, which in the private CYPRX Discord, I give access to curated playlists with literally, I'm not even exaggerating, probably over 1,000 video breakdowns from these panel discussions. Every single time a new panel discussion comes out via large major institutions and organizations, we add it to the playlist, and that gives direct centralized access to a whole curated playlist of these panel discussions. What am I talking about? You have these forums like Digital Asset Forum. Look at all these videos, these juicy videos that they just dropped, right? Literally hundreds of videos that they just dropped a couple of days ago that have hardly any views. All panel discussions of large reputable individuals in the space talking about exactly what we're going over, talking about the future regulations, talking about, you know, what's trending, what's not trending, what to be paying attention to, what not to be paying attention to. This is how you get insightful information without tapping into the bullcrap mainstream distractions. And again, in our private CYPRX community, we have curated playlists and video timestamps of all these videos to fast track our private community members so they don't have to go through this process themselves and watch all these videos. We watched it for them and timestamp everything. Okay. This is the juice you want to be tapped in and paying attention to. And again, we have curated playlists. We have organized all this material for our private community members in our crypto research chat in our Discord. If you guys want access to it and you don't know where to find this stuff, you have access to it through the private CYPRX community. Okay. Now, research reports, as I mentioned, you can go on LinkedIn. We'll get into LinkedIn in just a second, but just to show you guys, okay, these research reports come out. Okay. And again, these are all shared in our private CYPRX research chat. You have research reports from Signum. You have research reports from Fidelity. You have research reports from BlackRock, UBS, all the stuff that nobody else wants to read. You guys have access to them, and they make this stuff publicly available. Okay. Tap in and read these reports, these 2025 digital asset reports. Look at what they talk about. They literally tell you in their documents. Look, it says right here, if we go down, it says fundamentals, they believe, look, fundamentals, we think, are the most important thing for long-term investors to pay attention to. This is coming directly from Fidelity. You all see that right there, right? We're not making this stuff up. I'm telling you guys to pay attention to fundamentals here at CYPRX. We're just delivering insights from institutions that are telling you guys this. All right. This is the Fidelity 2025 digital asset look ahead. And in that report, they literally tell you word for word, we think fundamentals are the most important thing for long-term investors to pay attention to. Yet nobody does for some odd reason. I wonder why the vast majority of retail investors lose money. Because they're not paying attention to the right information. They're paying attention to bullcrap. Here's another free platform that you guys can utilize to check out news. Again, you're going to have to learn how to navigate it. This is not a video on how to navigate it, but this is forexfactory.com. It's got all the breaking headlines surrounding Trump trades, you know, tariff implications, inflation, labor market data. You can come over here to the calendar. You know, you can orient your attention over here to the toggle section, and you can, you know, siphon through what jurisdictions you want to see news data on. Like if you want to see Japanese data, you can toggle the JPY. If you want to see UK data, you can toggle the Great British Pound. Like I predominantly fixate my attention on Japanese data and US data, and you can apply that filter and you can see what data comes out for the week. And then you have these little tiny drop down folders that give you articles about these fundamentals that come out and talk about how it affects the markets. And you can pay attention to this stuff. Again, here at CYPRX, this is what we pay attention to. We don't pay attention to the bullcrap mainstream jargon. Now, this is not an advanced platform. I'm just showing you guys free resources. This is not Bloomberg Terminal. This is not Reuters Terminal, which we also tap into here at CYPRX. But this is just the free stuff that you guys can go out. Anybody can go on Forex Factory, toggle this news channel and read these articles, toggle this calendar event and see what data is coming out. And you can see, again, in real time, how this stuff affects the markets. Another really good platform that is for free is tradingeconomics.com. Trading Economics is kind of similar to Forex Factory, a little bit more upbeat, in my personal opinion. But you have the calendar tab here where you can go in and you can look at what events are going to be coming out. You can click the different impacts that you want to see. You can click the different countries, toggle different jurisdictions, and so on and so forth. You can go to the main homepage where they write out some of these articles for you guys. I mean, this is such a great resource of information. All right. If you really want to tap into this stuff, another resource that I personally like is FX Street. Now, you have to be careful with FX Street because they do have fundamental analysts on here that write bullcrap articles. With FX Street, I predominantly utilize the search bar and I toggle key vocabulary words like tariffs, like inflation, labor market data, yen, dollar, and I'll really fixate my attention on just key vocabulary and not the speculative news articles that come out on this platform. So again, be careful with this platform, but it's still a free platform for you to go and tap into. For example, here's a full fundamental piece talking about trade wars, talking about what's going on in the market, talking about the recent economic data, right? And how, the trade wars are weighing on risk assets and creating more demand for safe haven, so on and so forth, right? Use keywords when you're on these types of fundamental platforms, also like Reuters, so on and so forth. And then the last resource that I have to share with you guys today, again, like I said, just a couple of free resources to hopefully steer you all in the right direction, is LinkedIn. I cannot stress enough, it's almost as if everybody on Twitter has no freaking idea that LinkedIn even exists. LinkedIn is where all the juicy gems are. For example, I'll give Quant as a perfect example. Quant is super active in the space, and everybody thinks because they fell off on Twitter, they're not active in the space anymore. They drop so many juicy articles and fundamentals and closed door meetings and panel discussions on LinkedIn. But the reason why I'm orienting your attention to LinkedIn is because you can see here, all of these large investment firms, hedge funds, institutions have LinkedIn profiles. And what do? BlackRock, State Street, freaking Deloitte, IBM, Accenture, PwC, International Monetary Fund, the World Bank, the World Trade Organization, Asian Development Bank, Citi. So, I mean, the list goes on, okay? Any institution that you could probably think of or fathom in this space has a LinkedIn profile most likely, and they release fundamental articles. They release macro breakdowns, right? They have full fundamental pieces on tariffs, on trade wars, on inflation, on freaking anything that you could think of fundamentally that are driving macro factors to the market price action. They talk about these things publicly. Okay. They give you guys this information. Here is the most recent EY report. In this report, they're talking about tariffs and how it's going to affect the markets, what it's doing to risk assets, what it's doing to safe haven currencies, what previous tariffs did. So that way investors can have an outlook on, historical data and see how previous tariffs that were announced by President Trump in his last term affected the market, so on and so forth, right? We head over here. This is the BlackRock LinkedIn profile. And look at this, they're broadening outlook on risk. And if you go over to the report, what are they talking about? It says here, long-term uncertainty is being compounded this year by near-term policy uncertainty. Trade policy uncertainty has soared to its highest in 65 years. Again, which is why we've seen an outflow of risk assets. Like, they literally tell you this stuff in their documents, people. They don't hide this stuff. And this is coming from perspectives from the largest asset managers on the face of this planet. So why would you not want to tap into this info? Okay. It is all readily available there for you. Now, again, all of this stuff can look sporadic. It can look all over the place. You might not know how to navigate these platforms, find these articles, find these panel discussions, find these links. And that is why we've created the CYPRX Discord and the research chat. We type out handwritten fundamental reports. We condense all this information in one centralized location for you guys, for you to tap in. Right? So I've shown you guys free resources. It is up to you now to decide whether or not you want to take that a step further, tap into those free resources, or come and join a like-minded community that puts all this stuff together for you guys in a well-packaged environment for you guys to capitalize and soak up this information for yourselves. I cannot stress enough that now is the time to avoid reading these mainstream bullcrap news fundamental outlets in crypto and dive past open the curtains, peel back the curtains, and see what's behind the scene. And it will literally blow your mind at how easy it is to navigate these markets, to remain certain in the longevity of this space, to not be shaken out of your positions, to actually make properly well-informed investment decisions in this space by understanding when to implement capital in this market and when not to, by paying attention to what the banks do and what the institutions do and what the hedge funds do, and not what these idiots on Twitter and YouTube do. Okay? I cannot stress enough, people. Wake up, wake up, wake up. All right. So that's my video today for a little bit of a rant. I know the past two videos were a little bit of a rant, but I just cannot stand to see people, normal people, right? I'm a normal person just like you who came into this space 9 years ago and strive for success in this space. And I've succeeded at doing so, right? I've created 7 figures for myself. I've established multiple different internet businesses, so on and so forth. And I want to see other people prosper as well. And it's just so crazy to me that these multi-millionaires and these large influencers on the internet don't want the same for people. I do. And so if you can gravitate towards that, then that information is here for you guys. And I'm an individual in this space that's willing to show you all that it exists. Many blessings to you guys as always. Cannot stress enough. Be cognizant, be aware out there. Please pay attention to what information you're soaking up. And I'll see you guys in the next YouTube video breakdown.